Well, today is November 1st, 2022, and we've just seen the month of October go by in the stock market. You know, today, November 1st actually was my father's birthday, and today he would be 101 years old. And I remember when I first got in this business, it was 1986. The next year was the October crash of 1987. And I'll be honest with you, I was shaken to the core. And I remember talking to my dad about it, and he kind of looked at me and he said, "So the market's really down a lot, right?" I said, "Yeah." I said, It's horrible." He said, "Well, don't you think that's probably a pretty good time to buy?" I thought, he really had the right way of looking at things. So we're going to talk a little bit about what happened in the month of October. This is Steve Wolf, and we'll give you the results of the last month. So October 2022, the Dow was up 14%. The S&P was up 8%. The Russell 2000, one I haven't talked a lot about, was up 11%. And the NASDAQ was up about 4%. What a great difference from the month before. The month before that, in September of 2022, the Dow was down about 8.8%. The S&P was down about 9.3%. The NASDAQ was down 10.5%, and the Russell was down about 9.7%. Huge difference between one month and the next. Year to date, so far, the Dow is still down about 10%. The S&P is still down about 19%. The Russell 2000 is down around 17%, and the NASDAQ is the one really taking down the chin, down almost 31% for the year. And that's the one where a lot of the tech stocks are located, especially the large cap tech stocks. And I know we've talked about this before, that those are those tech stocks or the big growth stocks, those are the ones that are really have gotten hit pretty hard over the past year. So one other thing that I meant to mention, from the highs, from where the markets were actually at their highs, and that was for the most part in November of last year, of 2021, the NASDAQ is still down about 31%, the Dow down around 11, S&P down around 19, and the Russell down about 25%. Folks, that's really kind of the definition of bear markets. Most bear markets are 20 to 25, sometimes 30, 35% down. And I know that when we talk to people and before we open an account, we always say, would you be okay in an investment that could be down by 25 or 30%? And usually everyone shakes their head, yeah, I know, I understand, until they actually go through it. And then they see that their accounts are down by a lot of dollars. They don't look at the percentages all of a sudden. They're down by a lot of dollars. And it gets a little bit different. I can tell you that over the last about 2-3 weeks ago, people were as despondent as I've seen them in a long, long time. And sure enough, and this may not be the bottom, but the market plunged down. I believe it was October the 13th or 14th. It plunged down, and then that day it came right back up. And so far, we haven't looked back. Don't know if that's going to continue. But it kind of reminds me of a poem that I wrote, and now I'm going to put on my poetry hat, my certified financial poetry hat. The name of this is the Stock Market Forecast, and it's very short. When the stock market's down and you're filled with great sorrow, have just a little patience. It gets better tomorrow. And that's kind of what happened. So before I tell you too much more, I'm going to give you a little bit of a disclaimer here. The monthly disclaimer, whatever I'm saying is for informational purposes only, and it's not meant to be a recommendation. Before you buy or sell anything related to anything I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure it's the best recommendation for your personal situation. Now, the interesting thing is, there's an article that I read, actually from Kiplinger, who's been around for a long time, that company, and they talked about what happens when the month, like in October, that the Dow is up by 10% or more. What happens in the future? Which is, of course, why I consulted my little crystal ball, and I think I know what's going to happen. And if you don't believe me, well, it's okay. So, what's going to happen? If you look at the Dow's upward months, where we've been up by more than 10%, there's about 11 of them in the past 50 or 60, 70 years. Going forward 3 months later, the average gain is about 5.6%. Go forward 6 months later, the average gain is about 10.7%. And go 12 months later, and the average gain is about 15.9%. There have been 3 years out of those 11 that the market was actually down 12 months later. One was in January of 1976, and we finished down about 2.1% a year later. One was January of 1987, and we were down about 9.3% a year later, and that, of course, was when the October of 87 crash hit. And then April of 99, and we were down 0.5% 12 months later. So your odds, according to, and by the way, this comes to me from the Carson Group. That's what this table is about. And the odds of, if past is prologue, the odds of being up is about 73%, 72.7% based on those numbers. Now, who knows? Anything can happen. It may actually go down. We don't know. But it's interesting to note that after we've had these big down markets, most of the time, 3, 6, 12 months later, we're up. And certainly the longer you go out, the more true that is, which is one of the reasons I try to tell people, don't look at things from day to day, even month to month, sometimes even year to year, because you have to look at it over market cycles. We just went through a 10-year market cycle where we were up, it seemed. We didn't go up every year, but it's been a tremendous bull market. And all of a sudden, this year, we had a really bad bear market. Now, I think that what's going to happen tomorrow, and you may already see this because when you view this particular video, it probably will already have happened, but the Fed probably is going to raise rates by 75 basis points. Then they're probably going to do another 50 basis points for the end of the year and maybe another 25 basis points a year later. That will put them at the rate that they were talking about, 4.6%, that hopefully they'll stabilize. I know I talked about this last month. I'm hoping that the Fed isn't doing too much too soon because we don't want to go into a depression or something like that. We don't really even want to go into a recession. That's the other thing too. What's been going on with earnings over the last month? We have actually seen earnings be better than people thought they would be. They're coming in actually fairly good. The companies that are coming in that are bad, they're getting hit pretty hard. And the ones that are coming in where it's not quite as good as they thought they were going to be, and that's really where a lot of the big tech stocks are, they're getting hit hard. I saw where Microsoft got hit hard, where Meta, which used to be Facebook, got hit hard, Google, Amazon, all the big ones are getting hit hard. So that won't last forever either. I mean, eventually they hit bottom and go the other way. So I'm a little more optimistic. Obviously, it's easier to be optimistic when you've had a good month than it was maybe a month ago. Also, I saw a chart here that actually shows what happened here in October. And this is a chart, again, by the Carson Group. And Ryan Dietrich, the chief market strategist at Carson Group, was the one that put this together. And it basically shows what happened in the last month pictorially. And you can see where from October about the 14th on, the market really has just shot straight up. So what does that mean for next month? I really don't know. I'm hoping that the powers that be, the Fed in particular, doesn't continue on this inexorably higher, fast, high velocity move upward for interest rates. The only good thing about those interest rates, though, it has put the income back in fixed income. I know a lot of people who are on a fixed income, they couldn't get a CD, a bond, or whatever, and make any money. They were just really, behind the eight ball. Now you can at least get something for your money. It's still not keeping up with inflation yet. Inflation is still running very high. The last that I saw was in the month of October. It was about an 8.3% higher rate than the previous year. But it looks to me like the economy is starting to slow, which is exactly what the Fed wants, which is why I'm hoping that they will not continue just raising and raising and raising and raising to the point where they're just going to kill the economy. So that's where we are for the month of October. It was a good month. October has generally been a good month, which followed September, which is usually a bad month. Go figure, but that seems to be the way it is most of the time. And November, generally speaking, and December, generally speaking, are good months. We'll see what happens, and we'll take a little snapshot with my 1960-something camera. It's actually Jocelyn Magana's camera, who is our the guy behind the camera shooting me right now. At any rate, we're going to take a snapshot of what happens in November, and I will be back here in the beginning of December to let you know what happens. In the meantime, happy investing.